On today's episode, we talk about winning in today's market, ways deals die, and surefire seller credit strategies. My name is Mark. Welcome to the Gentleman Broker Mortgage Brief. Why buyers are winning right now. Let's start with this. Rates are higher than people want them to be. We know that. That's real. And buyers should care about that. But here's what's also real. When rates go up, competition goes down. And that changes everything. Right now I'm seeing fewer multiple offer situations, more days on market in certain price points, of course, and sellers being more open to negotiation. That includes price reductions, seller credits, and rate buy downs. Things that were almost non-existent when rates were in the fives. So what does that actually mean for buyers? It means they have leverage. And leverage is something you don't get when rates drop. Because when rates drop, everyone comes back into the market at the same time. And now you're not negotiating, you're competing. I care about your rate, and I want you to get the lowest possible rate in real time. But you can refinance a rate later. You can't renegotiate the price you paid for the home. So the buyers who understand this right now, they're not ignoring rates. They're just not letting rates be the only factor. Let me give you a real world example. You buy a house for $500,000 and you get hosed at an 8% rate. I mean, you just said whatever and you bought the house even though others said to wait. 5 years go by and someone else wants to buy the exact same house at current market price, which would be about $580,000. It's gone up 3% a year like normal. So $500,000 5 years later is worth $580,000. They get a 6% rate. They were patient and they waited for rates to drop by 2% and it paid off. Now back to you. Your payment has been around $3,600 a month, but you've also got to paint your kids' bedrooms. You got to make the backyard of your dreams. You got to put the little lines on the door frame that says how tall your kids got each year. You have memories and you've built ownership. You built a life and a home. The other guy, he's been patiently renting, putting up with existing appliances, no ceiling fans in the rooms, and his wife waiting to plant a garden of her dreams. And they've been saving, and while they're saving up that cash, the exact home is going up about $15,000 per year. But they do it. They carve out not only the $15,000 simply to keep up, but another $5,000 per year for their down payment. So now he finally buys that same home for $580,000 at a 6% rate, and his payment is about $3,400. He's now saving $2,400 a year from what you've been paying. But it turns out you've been saving about $2,600 a year this whole time. You've been writing off your mortgage interest and getting an average of $2,600 more on your refund because of it. And now, 5 years later, you have about $120,000 in equity in your home. Now that counts the $80,000 in home value and about $25,000 in principal you paid down. That, along with your initial down payment, you're able to refi, get that same 6% rate that the other guy has, and since you're now at 80% loan to value, you get rid of the mortgage insurance as well. One waited for the deal, the other built it. This is real. This is happening. You should know the full story. Next, 3 ways deals die after mutual. Let's talk about something I hear about from realtors giving me horror stories from their colleagues. Deals that started out solid and then fall apart after mutual. From where I sit, this is usually for one of 3 reasons. 1, weak pre-approvals. Not all pre-approvals are the same. Some are based on a quick credit pull, stated income, and automated findings, but no real document review. It's more of a trust and we'll verify later kind of thing. So when that file actually gets into underwriting, things change. income doesn't qualify the way they thought, debt ratios shift, or conditions come up late. And now the deal's in trouble. For the realtors, one question you can ask the lender before accepting an offer: has this file actually been reviewed or just run through the system? Because those are two very different things. 2, debt changes during escrow. This one happens more than people want to admit. Buyer opens a credit card, finances furniture, maybe they buy a car. Even small changes can impact your DTI. And what was once approved is no longer approved. So home buyers, wait till you actually own the 3-car garage before you buy the car to fill it. And 3, appraisal issues. If the value comes in low, a buyer has to bring in more cash. They have to renegotiate or may even have to walk. And buyers and sellers alike aren't prepared for that conversation. Nobody wants the deal to fall through. Sellers need realistic, real-time pricing of their home, and buyers need to not let their emotions drag them into a bidding war during an escalation clause. Last on the agenda, seller credit strategy. Now let's talk about opportunity, because this is where deals are getting interesting right now. Seller credits are making a comeback, and most buyers don't fully understand how powerful they can really be. Here's the key. A seller credit can be used for closing costs, prepaid items, or buying down the interest rate. Here's an example. Let's say a buyer can get $10,000 off the price of the home, but instead their agent negotiates $10,000 in seller credit. They could use that to reduce cash to close, which would mean less out of pocket for the buyer. Or the buyer can use that buy down in rate and lower their monthly payment by a good amount, typically like $200 or more. And in this market, I'm seeing more sellers willing to give credits than drop price. A quick note for agents: there are limits depending on loan type. FHA allows higher seller contributions, whereas conventional has caps based on down payment. But within those limits, this is one of the strongest tools you have right now. And as real estate agents know, in this market, it's not just about getting the deal accepted, it's about structuring the deal correctly. So if you zoom out, right now, buyers have more leverage than they realize. Deals are won or lost in the details, and strategy matters more than ever. If you're a realtor wanting a mortgage advisor who will advocate for you and your client, if you've got a deal and you want a second set of eyes on it, or if you're a buyer and just want to learn more and want to feel confident in making a decision in this market, I'm always here as a resource. You can contact me through my DMs or at thegentlemanbroker.com. I have a quote my wife really likes by Maya Angelou. People will forget what you said. People will forget what you did. But people will never forget how you made them feel. This has been your mortgage brief for the week. For everyone watching, I hope today is the start of a productive week. I hope you are proud of the work you are doing. My name is Mark, and I am the Gentleman Broker.